Hello everybody, today we're going to be talking about preparing master budgets. What exactly is a master budget? Well, a master budget is the central planning tool that a management team uses to direct the activities of a corporation. Essentially what we're going to do is we're going to establish predicted values for all the various components of production, and we are going to figure out what amount of revenues and costs and therefore income we're going to make for the period based on all these different components. So we're going to figure out how many units we're going to sell and what our selling price is going to be per unit to determine our revenues. We're going to figure out the cost directly related to production. So how much we're going to have to spend in direct materials to make that quantity that we plan to produce, how much we're going to have to spend in direct labor, and how much manufacturing overhead our production facility is going to incur. We're also going to have expenses that are not related to production, things like administrative salaries, rent on an office building, depreciation on office equipment. All of those are going to be recorded separately from our total cost of production. Therefore, we're going to put them in a separate budget. And lastly, once we have all our budgets prepared, we're going to be able to predict the timing of the company's cash flows, when cash is coming in and when cash is going out. To prepare a master budget, you have to break it down into a compilation of what they call lower level budgets. Each of these budgets focuses on exactly one thing. So we're going to have a budget purely for the amount of units that we expect to produce. We're going to have a budget purely for the amount of revenue we expect to generate. We're going to have a budget purely that focuses on how much we're going to spend on direct materials during the period and how much materials we're going to have to buy in order to make that necessary amount of production. Information from one budget will flow to another budget, so you have to prepare a master budget in a preset or predetermined order. And that order is this. It starts with the sales budget, how many units you expect to sell and what your proposed selling price is to figure out what amount of revenues you expect to make. From there you go to the production budget, which is how many units you plan to produce in order to make that level of sales and the timing of your production. The costs of production are going to go to three separate budgets. They are the direct materials budget, the direct labor budget, and the manufacturing overhead budget. You compile the information from all three of those to figure out your total cost of goods sold for the amount of units you plan to produce. That information is tracked in the cost of goods sold budget. All of those costs are related directly to production. The costs that are not related directly to production, your administrative salaries, your supplies expended by your administrative office, your rent on your administrative office, are all going to go into a separate budget called the SG&A budget, which stands for Selling, General, and Administrative. All of that information from all of those budgets we just talked about is going to flow into a cash budget. The cash budget tells you when your inflows of cash are going to be and when your outflows of cash are going to be, so the amount of cash you plan to have at the end of each period of time. More information that you need in the cash budget is how much you plan to spend on capital expenditures. Those are the big projects that companies undertake. So establishing a new facility, buying new equipment, launching a new product line, all capital expenditures. They all require cash payments, so that information goes into the cash budget as well. And once our cash budget is compiled, we can produce a budgeted income statement that tells us how much income we plan to make if we meet all of our goals of production at the cost that we are predicting. And from there, you can prepare a budgeted balance sheet, which predicts what amount of assets, liabilities, and equity you should have at the end of the period if you meet all of your goals from your previous lower level budgets. The first budget that you always prepare is the sales budget. And the sales budget records a company's sales expectations for the upcoming period. So we're going to figure out how many units we plan to sell and at what price we plan to sell each of those units for. Therefore, we can predict our revenues for the period. The company we're going to be preparing a master budget for is called Saratoga Chips, and Saratoga Chips is going to produce and sell potato chips. They only sell one size of potato chip bag, 1 pound bags, and even though they make different flavors, there's not a significant cost difference to manufacture these different flavors. So we're going to determine our cost of goods sold for all potato chip bags equally. Saratoga Chips has one production facility that they use to make the potato chips, and then they have a separate corporate office. So we need to separate the cost of these two different locations into different budgets. Production facility is going to go into our cost of goods sold budget, while our corporate office is going to go into our SG&A budget. We'll start with the sales budget. I've given you guys a handout, and there's a bunch of information on the handout that tells you how to prepare this, but I've compiled it here as well. It's on the chalkboard on the left side. Saratoga Chips expects to sell 100,000 bags of chips during the first quarter or the first 3 months of 2019. They expect to sell 110,000 bags of chips during the second quarter of 2019. In the third quarter, they expect to sell 120,000 chips, and in the fourth quarter, they expect to sell 100,000 chips. Their sales price is proposed at $2.50 per bag for the first and fourth quarters, but during the more busy season, if you will, of the second and third quarters, they're going to raise the price of their chips to $2.75 a bag. And during the entire year, they're going to offer a sales discount equal to 2% of total gross sales. So we start with our row for budgeted bags to be sold, and all we do is we copy the information over from the sales quantity section of our info. So during the first quarter, we expect to sell 100,000 bags of chips. During the second quarter, 110,000. Third quarter, 120,000, and in the fourth quarter, our sales volume will recline down to 100,000 bags of chips again. In total, during the year, that means we expect to sell 430,000 bags of chips. Our average sales price comes from the sales price section. During the first quarter, we expect to sell chips at $2.50 a bag. During the second and third quarter, respectively, we expect to increase our sales price to $2.75 a bag before it goes back down to $2.50 during the last quarter. To figure out our total gross sales, we simply take the budgeted bags to be sold and we multiply it by our average sales price per bag. So for the first quarter, we take the 100,000 bags that we expect to sell, we multiply it by $2.50, and we figure out that our total gross sales is going to be $250,000. We do the same thing for every other quarter. So during the second quarter, we take 110,000 bags to be sold. We multiply that by our $2.75 average sales price per bag, and we expect to generate total gross sales of $302,500 during the period. During the third quarter, 120,000 bags to be sold at $2.75 a piece means we're going to have total gross sales of $330,000, and in the fourth quarter, our total gross sales are going to drop back down to $250,000. All in all, we expect to have $1,132,500 worth of gross sales during 2019. For sales discounts, we need to figure out what 2% of our total gross sales is. Well, during the first quarter, we have $250,000 in total gross sales. If we find 2% of that, we come up with a sales discount of $5,000. During the second quarter, we're going to have a sales discount of $6,050. We took the $302,500 in total gross sales from the second quarter, multiplied it by 2%. In the third quarter, we find 2% of our total gross sales of $330,000, which ends up being $6,600. And during the fourth quarter, we take 2% of our $250,000 in proposed total gross sales, means that our discount again is going to be $5,000. Means all in all, during 2019, we're going to give $22,650 worth of sales discounts to our customers. So our net sales is simply the amount of total gross sales we have minus our sales discount. $245,000 for the first quarter and $296,450 for the second quarter. In the third quarter, we take $330,000 in total gross sales. We subtract out our sales discount of $6,600, means we're going to have total net sales of $323,400. And during the fourth quarter, we're going to have total net sales of $245,000. All in all, if we add up all the numbers in our total net sales row, we come up with total net sales for the 2019 period of $1,109,850.